Hello everyone, welcome to the Ichimoku daily analysis for the Aussie dollar US dollar FX for Thursday, December the 2nd, 2010. Well, the market changed trend today. We have a candle that's made a higher high and a higher low, and it's a green body candle. Previous day's trading, we had a candle that was in bar chart terms an outside day, so we hadn't had a change of trend. That was a downside trend with the previous candles making lower highs and lower lows. We actually had that candle from yesterday making a higher high, but it failed to make a higher low. It made a lower low. So the trend hadn't technically changed. Today we did have that change of trend to the upside, and that coincided with yesterday being a fairly bullish candle with a very large green body and the market closing up towards the highs, suggesting that the buyers closed in control. Once again, we have a similar sort of candle, a slightly smaller body, but that tells us still that the buyers made net bullish progress on the day between the open and the close. And the shadow on the bottom tells us that the sellers lost commitment throughout the day. But by closing up towards the high, it tells us that the buyers closed the market in control and they showed some commitment throughout the day. Now, if we look at where the high traded to, it traded right to the top of the cloud. And we know that the Ichimoku cloud can act as an area of support or resistance. And in this case, it's acted as resistance. And there was a slight amount of selling as the market touched that area. Now, that's a very important area for this market over the next day. So that's around 97.78 roughly, or 97.80. Which is near the high for the day. And if we do see the market testing that area in a bullish way, then the market may appreciate and trade up a bit higher and perhaps test up around 99.5 to the $1 region. So a breakout up above there would be a bullish signal in Ichimoku charts. At the moment, with the market trading within the cloud, it's giving us a neutral signal. Now, the market, however, is trading down below the Kijun-sen, and that is suggesting that the market is bearish in the medium-term time frame. But we've just taken out the Tenkan-sen, suggesting that the market is bullish in the fast-term time frame. Now, only slightly bullish because it's closed at or just around the Tenkan-sen, so it's really fairly neutral as well. Just looking over here to the cloud, we can see that we had the two indicators that make up the cloud have actually twisted. And we had previous bullish indication with the Senkou span A on top of the Senkou span B, and that's changed, and that is a bearish indication. So that could be significant for this market. If we look at the trend, we have a series of lower peaks and lower troughs here. We have a peak, a trough, a lower peak, and then a lower trough as the market took at that previous trough. So the market may find a lower swing high or a lower swing peak soon, and then continue trading off. But that may coincide with this potential resistance offered at the cloud. Now, just looking at bigger picture terms here, we actually had the breakout down below a head and shoulders pattern, and we can see here it's a complex one. And here we have two peaks here that made up the left shoulder. Here we have the head, and here we have a much smaller right shoulder. We draw a line through the two shoulders to give us the neckline, and we had the bearish breakout that just closed down below. Previously, the market traded up to within the area, and then a very bearish close down below the neckline here. Quite often when we have head and shoulder patterns, when they start to form and they're completed, they tend to retrace back towards the neckline, and if we extend that neckline out, that's exactly what's happened here, and that coincides with the top of the cloud here. And then they sell off and continue the downtrend to the downside. So if that does happen, we do need to watch the low of the current candle for any potential lower high and lower low. Now, we do have some good support down around this 95.40, 95.50 area, where we can see the shadows on the bottom of these candles, and buying came in around those levels. But there could be very good support anywhere down through the cloud here, all the way down through to this roughly 94 region. So very important for the next day's trading is to watch the high of the current candle and the top of the cloud here, but certainly watch the low for any potential continuation of the second time frame downtrend.